$72.35. Do not look at this number as just a price on a screen. Look at it as a tombstone. For 50 years, the financial laws of gravity said this was impossible. For 50 years, the most powerful institutions on Earth, the Federal Reserve, the bullion banks, the Treasury, spent trillions of dollars to keep this specific cage locked tight. But this morning, the beast broke out. It is December 24th, 2025. While the world is distracted by Christmas lights, holiday travel, and the illusion of normalcy, the global financial system has just suffered a catastrophic stroke. The kill switch, the secret emergency mechanism used by the bullion banks to crush the price of silver whenever it threatens the dollar, has failed. Totally, completely, irreversibly. Right now, the vaults in London are sealed shut. The trading desks at JP Morgan and Citi are in absolute chaos. And if you do not hold physical metal in your hand at this exact second, you are witnessing the vaporization of your purchasing power in real time. How did a dead rock destroy the banking cartel in a single morning? This is not just a market rally. This is the end of the fiat currency experiment. To understand the sheer violence of today's crash, you have to unlearn everything the news has told you about money. They tell you the price is determined by supply and demand. That is a lie. That has been a lie since 1971. For the last 4 decades, the price of silver has been determined by one thing: leverage. Let's take you inside the machine. The COMEX, the Commodities Exchange in New York. This building is not a store where you buy metal. It is a casino where you bet on the idea of metal. The game was rigged from day one, using a system called fractional reserve bullion banking. It works like this. Imagine a massive parking garage that has exactly 100 parking spaces. But the owner, greedy for fees, sells tickets for 10,000 cars. He knows that on any given day only 50 cars will show up. So he pockets the money for 10,000 tickets, and the system looks fine. Everyone is happy. The ticket holders believe they have a spot. The owner gets rich. But what happens when there is a massive event? What happens when 10,000 people show up at once to park their cars? Panic, gridlock, total collapse. In the silver market, we call this the paper-to-silver ratio. By late 2024, the internal data showed that for every single ounce of physical silver sitting in a registered vault, there were nearly 400 paper contracts trading against it. 400 to 1. Think about the audacity of that fraud. The banks, giants like Citi, HSBC, and the old JP Morgan desks, were selling silver they did not have. They were selling digital ounces. Phantom silver. Why would they do this? Because by flooding the market with unlimited fake supply, they could keep the price artificially low. A low silver price makes the US dollar look strong. A low silver price keeps the inflation numbers looking manageable. It was the perfect, invisible prison. And for 40 years, the prisoners, the public, accepted it. They bought the ETFs. They bought the paper promises. They believed the lie. But every Ponzi scheme has a mathematical limit. Eventually, the garage fills up, and today, the last car tried to enter. To truly grasp why this happened today, we must look at the geology. While New York was playing this paper game, the East was playing a different sport entirely. They were playing capture the flag with real resources. Start the timeline in 2023. The Shanghai Gold Exchange began to show strange anomalies. The price of silver in Shanghai started trading significantly higher than the price in New York. Sometimes 10% higher, sometimes 15%. This is called an arbitrage window. In a free market, traders would buy cheap silver in New York and sell it in Shanghai for a profit, closing the gap instantly. But the gap didn't close, it widened. Why? Because the metal was leaving the West, and it was never coming back. China, Russia, India, and the expanded BRICS alliance were not buying contracts, they were standing for delivery. They were taking the 1,000-ounce industrial bars, loading them onto armored transport planes, and flying them out of Western jurisdiction. They weren't doing this for profit. They were doing this for survival. They looked at the geological data that the Western media ignored. They saw the green paradox. You see, silver is not just money. It is the most conductive element in the known universe. It is the vampire of metals. It vanishes. You cannot build a hypersonic missile without silver contacts. You cannot build a generic solar panel without silver paste. And most critically, you cannot build the artificial intelligence infrastructure of 2025 without massive amounts of silver for the new generation of chips. Every NVIDIA chip, every server rack, every quantum computer relies on silver. By mid-2025, the world was consuming 1.4 billion ounces of silver a year. But the mines? The mines were dying. Let's talk about the mines. The great Fresnillo mine in Mexico. The Yanacocha in Peru. These giants are old. The ore grades have been falling for 20 years. In 2005, you could dig up a ton of rock and find 15 ounces of silver. Today, you are lucky to find 4. We are running out of easy silver. The deficit was structural. We were running a deficit of 600 million ounces every single year. The surface stockpiles were being eaten alive. The parking garage was empty. But on the computer screens in New York, the banks kept selling tickets. They kept printing paper to suppress the price. They were betting that they could hide the shortage forever. They were wrong. The dam didn't just break on its own. It was bombed. The explosive charge was lit last month, November 2025. The geopolitical tension between the United States and the Latin American bloc reached a boiling point. President Trump, in a move to combat the flow of narcotics and secure borders, ordered a full naval blockade on key ports in Mexico and Venezuela. The official reason was national security. The unintended consequence was industrial suicide. Mexico is the world's largest primary silver producer. Overnight, the supply chain was decapitated. Refineries in Switzerland stopped receiving the gray ore concentrate. The mints in America stopped receiving the blanks to make coins. This is the moment the psychology shifted. It wasn't the gold bugs or the conspiracy theorists who panicked. It was the titans of industry. It was Elon Musk. It was the CEO of Samsung. It was Raytheon. Let me take you inside that boardroom panic. Imagine being the head of procurement for a major defense contractor. You have a government contract to build 5,000 missiles. You need silver for the guidance chips. You look at your inventory, 2 weeks left. You look at the market, blocked. Do you care if the price is $30 or $300? No, you do not care. You need the metal or your factory closes. You need the metal or you default on a military contract. So, the industrial giants bypassed the banks. They went directly to the few remaining mines in operation. They picked up the phone and said, "We will buy everything you dig out of the ground. We will pay double the spot price. Just ship it to us." And just like that, the spot price on the computer screen became irrelevant. It became a ghost number. On the street, real physical silver was trading at $50. But on the COMEX, the algorithms were still fighting to keep it at $35 to protect their short positions. The spread was $15. This was the signal that the system was broken. The paper price was a hallucination. The physical price was reality. And reality was about to kick down the door. This brings us to the scene of the murder. Last Friday, December 19th. The tension in the markets was palpable. The price on the screen was ticking up. 64, 65, 66. We were approaching the death line. $67. Why this number? Why is $67 so important? Because the 4 largest banks in the US held massive short positions. Bets that the price would fall, billions of dollars in derivatives. If silver crossed $67, those bets would go underwater. The losses would exceed the capital reserves of the banks. They would be technically insolvent. They would require a bailout. So, at 8:30 a.m. New York time, they activated the kill switch. Traders have seen this 1,000 times. It is an automated, high-frequency trading attack. It uses a technique called spoofing. In a single millisecond, the banks dumped the equivalent of 1 billion ounces of paper silver onto the market. Not real silver, just electronic contracts, zeros and ones. The goal is to create a waterfall event, to shock the chart, to trigger the stop losses of the small investors, to make the price collapse by $5 or $10 in seconds. It works by inducing pure terror. It scares the weak hands into selling. They pushed the button. We watched the charts, waiting for the red line, waiting for the crash. The price dipped for 10 seconds. And then a green candle appeared, a massive, vertical, violent green line that erased the dip instantly. The trading floor went silent. Someone was on the other side. Someone with pockets deeper than the Federal Reserve. Maybe a sovereign wealth fund. Maybe the Chinese state. Maybe a consortium of desperate tech companies. They opened their mouth and swallowed the entire dump. They bought every single fake ounce the bank sold. The algorithm didn't know what to do. It was programmed to scare sellers, not to feed buyers. It tried to sell more. The buyers took it all. The banks ran out of ammo. The kill switch was jammed. And then the price started to run. What happened next is called a gamma squeeze. It is the nightmare of every Wall Street risk manager. Because the banks had sold silver they didn't have, and the price was now rising, they were trapped. To close their positions and stop the bleeding, they had to buy silver back. But because they were forced buyers, their buying pushed the price higher. And because the price went higher, they had to buy more. It is a death spiral, a feedback loop of destruction. Friday closed at 68. Over the weekend, in the Asian markets, panic set in. Monday morning opened at 70, and today, Christmas Eve, the dam burst completely. $72.35. This is not just a high price. This is a force majeure event. That is legal speak for, we are defaulting on our promises. Reports are leaking from New York right now. The COMEX is holding emergency meetings. They are preparing to change the rules. They will likely declare liquidation-only trading when the markets reopen after Christmas. That means you are allowed to sell, but you are forbidden to buy. It is the ultimate admission of defeat. They are trying to lock the doors of the bank while the building is on fire. But it's too late. The trust is gone. The industrial buyers are not looking at the COMEX anymore. They are securing private deals. The separation is complete. Silver has remonetized itself. Let's look at the history to understand the magnitude of this. In 1980, the Hunt brothers tried to corner the silver market. They drove the price from $6 to $50. But that was speculation. That was two rich brothers buying silver with leverage. The government changed the rules, raised margin requirements, and crushed them. The price collapsed back to $10. In 2011, silver hit $49. Again, it was driven by speculation and a weak dollar. The banks smashed it down again with naked shorts. But 2025 is different. This is not the Hunt brothers. This is not speculation. This is industrial exhaustion. You cannot raise margin requirements on Apple. You cannot force Samsung to sell their silver. They need it to build products. The demand is inelastic. This means the price can go to $100, $200, $500, and they will still pay it. Because the alternative is bankruptcy. This is why the banks failed today. They brought a knife to a gunfight. They tried to fight physics with paper. Look at your life this Christmas. Real inflation is running at 20%. Your grocery bill has doubled. Your rent is suffocating. The media tells you the economy is strong. The stock market is at all-time highs. But ask yourself, is the stock market going up? Or is the dollar going down? The rise of silver to $72 is not a bubble. It is the only honest thermometer left in the hospital. It is telling you that the patient, the US dollar, is terminal. The failure of the kill switch proves that the central planners have lost control. They have no more tools. They cannot print physical commodities. They cannot print oil. They cannot print food. They cannot print silver. If they couldn't stop a tiny market like silver, what happens when this spreads to the bond market? What happens when the world realizes the US Treasury cannot pay its debts? We are entering the great repricing. Wealth is moving. It is moving from paper assets, stocks, bonds, currencies, into hard assets, into things you can touch. Let's talk about the street level. Right now, as we speak, online bullion dealers are shut down. If you go to the major websites,
You will see 404 errors. You will see out-of-stock banners.
You will see maintenance screens. They are not doing maintenance. They are hiding. They don't know how to price the metal. If they sell you a coin for $80, it might cost them $90 to replace it tomorrow. So they have stopped selling. The liquidity has dried up. If you go to your local coin shop, the shelves are bare. The lines are around the block. People who laughed at silver stackers yesterday are begging to buy ounces today. But there are no ounces left. If you are holding paper silver like an ETF or an unallocated pool account, I have bad news for you. You don't own silver. You own a credit risk. You are a creditor to a bankrupt institution. When the default notices go out next week, you will be paid in cash. They will give you $72 for each share, but you will not be able to take that cash and buy an ounce of silver because the real price will be $150. This is the difference between price and value. You are about to learn that lesson the hard way. This Christmas will be written in the history books, not as a holiday, but as the turning point. The day the algorithm died. The day the free market returned from the dead and took its revenge. $72 is just the beginning. If you adjust for the real inflation of the 1980s, the true high of silver is over $200. We are just leaving the launch pad. The banks are naked. The emperor has no clothes. And the people who stacked, the people who prepared, are the new captains of this ship. What happens next? In 2026, we will see the contagion spread. Gold will be next. Then, the bond market. The Federal Reserve will try to introduce a central bank digital currency to stop the bleeding. They will try to outlaw private ownership of metals. They will try to confiscate, but they will fail. Because the world has changed. The decentralized economy is here. The parallel system is being built. Do not let them gaslight you tomorrow. They will call this a glitch. They will call it market manipulation by foreign actors. They will blame hackers. They will blame Russia. Do not believe them. It is simply the return of math. Prepare for volatility. The system will kick and scream before it dies. But the kill switch is broken. Welcome to the other side.